In this video, we'll be going over the 5 hottest NVIDIA news stories of the week. Jefferies boosts NVIDIA's outlook. A daring startup challenges the AI giant. Revolutionary protein design powered by AI. Cramer's unwavering NVIDIA support. Citi sees even more potential in NVIDIA's future. First up, Jefferies has raised its price target on NVIDIA stock from $135 to $150 per share, representing a potential 27% increase. Analyst Blaine Curtis believes NVIDIA remains both king and kingmaker in the AI chip market. While it's too early to predict losers for 2025, there are growing concerns about AMD's pipeline. Meanwhile, NVIDIA continues to dominate the AI landscape. Jefferies' bullish stance isn't just talk. They've substantially increased their revenue and earnings per share forecasts for NVIDIA. For fiscal year 2025, they're projecting $181 billion in revenue and $4.23 in earnings per share. Looking ahead to fiscal year 2026, they predict $206 billion in revenue and $4.98 in earnings per share. These numbers are mind-boggling. We're talking about a company potentially generating more revenue than the GDP of many countries. It's a testament to how central AI has become to the tech industry and how well-positioned NVIDIA is to capitalize on this trend. Jefferies analysts recently returned from a trip to Asia, where they observed a significant increase in chip production capacity planned for the second half of 2024. Data from Fubon, a Taiwanese investment firm, suggests a 25% overall capacity increase for NVIDIA, with some partners like Blackwell seeing a 40% jump. Based on these findings, Jefferies has revised their estimates for NVIDIA's GB200 NVL chip. They're now anticipating volumes of 60,000 units, up from their previous estimate of 40,000. This increase is primarily driven by the NVL36 variant, expected to reach 50,000 units. I've got to say, this level of growth is unprecedented. We're seeing a company not just riding the wave of AI adoption, but actively shaping the future of the entire tech industry. But NVIDIA isn't the only player in town. A startup called Etched is making waves with its ambitious goal of taking on NVIDIA in the AI chip market. They've just raised $120 million in their Series A funding round. Etched was founded by Harvard dropouts Gavin Uberti and Chris Zhu. Their secret weapon? A specialized chip called Sohu, designed specifically to power AI models known as transformers. These are the same kind of models that power ChatGPT and other advanced AI systems. Etched claims their Sohu chip is an order of magnitude faster and cheaper than NVIDIA's upcoming Blackwell GB200 GPUs. They boldly state that one Sohu server replaces 160 H100 GPUs. That's a pretty audacious claim, and if it's true, it could be a game changer for the AI industry. Etched isn't just making empty boasts. They've partnered with Taiwan Semiconductor Manufacturing Co. to manufacture their chips using the most advanced 4-nanometer process. Etched CEO Gavin Uberti isn't mincing words about their ambitions. He told CNBC, "We're making the biggest bet in AI. If transformers go away, we'll die. But if they stick around, we're the biggest company of all time." Talk about putting all your chips on the table. But Etched isn't the only startup looking to take a bite out of NVIDIA's market share. Companies like Cerebras Systems, Tenstorrent, and Grok are all developing their own specialized AI chips. It's like watching a high-stakes poker game with billions of dollars on the line. Now, as exciting as this is, we need to take these claims with a grain of salt. NVIDIA has a massive head start, incredible resources, and a proven track record. But competition drives innovation, and if these startups can deliver on their promises, we could see some incredible advancements in AI technology. Speaking of advancements in AI, let's talk about EvolutionaryScale. This startup has just emerged from stealth mode with a bang, announcing a whopping $142 million in seed funding and the release of their ESM3 AI model for protein design. EvolutionaryScale's ESM3 model was trained using NVIDIA H100 Tensor Core GPUs, making it the most computationally intensive biological foundation model ever created. We're talking about a 98 billion parameter model that uses roughly 25 times more computing power and 60 times more data than its predecessor. What does this model do? In simple terms, ESM3 can generate new proteins for scientific research. This has massive implications for drug discovery, disease eradication, and even understanding human evolution. The model was trained on almost 2.8 billion protein sequences sampled from various organisms and biomes. Scientists can use ESM3 to prompt the model to identify and validate new proteins with increasing levels of accuracy. It's like having a super intelligent lab assistant that can design proteins from scratch or modify existing ones to have specific properties. To demonstrate the power of their model, EvolutionaryScale used ESM3 to generate a new variant of green fluorescent protein, GFP, which is responsible for the glowing of jellyfish and luminescent colors in coral. This might sound like a party trick, but it's actually a huge deal in the world of biological research. We're talking about using AI to potentially design new drugs, create more environmentally friendly materials, or even engineer organisms for specific purposes. It's like we're entering an era of programmable biology. Now let's switch gears and hear from Jim Cramer, the host of CNBC's Mad Money. Despite NVIDIA's recent market cap decline, a 13% drop in just 3 days, Cramer remains steadfastly bullish on the company. He stated, "I'm not going into the deep end to please those who want a market with better breadth and greater participation. I'm simply going to stick with the stocks of the best companies in the market." Cramer argues that unlike consumer-oriented companies that can easily lose customers, NVIDIA's enterprise clients aren't likely to take their business elsewhere. He says, "As crazy as it seems after its recent decline, I think it's easier to own, not trade, but own the stock of NVIDIA than it is to own shares in any of the companies that depend on the fickle, feckless, torn, strapped, beleaguered, mercurial, arbitrary, confused, and clueless consumer." I see where he's coming from. NVIDIA's customers are major tech companies and research institutions that are investing heavily in AI infrastructure. They can't afford to fall behind their competitors, which means they're likely to stick with NVIDIA for the long haul. But while Cramer's confidence is reassuring for NVIDIA bulls, we can't ignore the volatility we're seeing in the stock. A 13% drop in 3 days is no small matter, even for a company as successful as NVIDIA. Finally, Citi has just raised its price target on NVIDIA stock from $126 to $150 while maintaining a buy rating. This follows hot on the heels of the Jefferies upgrade we discussed earlier. Citi's decision is based on their increased forecasts for NVIDIA's earnings per share in calendar years 2025 and 2026. They've raised their estimates by 7% and 13% respectively, citing anticipated growth in the production of NVIDIA's GB200 chip for NVL3676 configurations. What's particularly interesting about Citi's analysis is their focus on the emergence of enterprise AI agents. They see this as the next big wave in AI demand, especially for inference tasks, which currently represent about 40% of NVIDIA's data center sales. Citi believes that NVIDIA's Retrieval Augmented Generation platform could form the core of these AI agents. They suggest that AI adoption is only about a third of the way to completion, which implies there's still a lot of growth potential for NVIDIA in this space. Citi analysts are drawing parallels between the current AI revolution and the early days of cloud computing. They describe the current state of AI adoption as being in the third, fourth innings, suggesting we're still in the early to middle stages of this technological shift. If Citi's analysis is correct, we could be looking at years of sustained growth for NVIDIA. The company has positioned itself at the very heart of the AI revolution, providing the hardware that makes these advanced AI systems possible. To wrap things up, I want to remind everyone that none of this is investment advice. The world of tech stocks, especially in the AI sector, can be incredibly volatile. Always do your own research before making any investment decisions. If you enjoyed this video, please hit that subscribe button and leave a comment letting me know which story you found most interesting. Your engagement helps me create better content for you. Until next time, keep your eyes on the tech world. It's moving faster than ever.